Hi everybody, welcome to another update on the gold forecaster index, the holy grail to predicting gold prices. In my last video I said that gold would go up and it has gone up by $200. What will this month bring? This video is dedicated mostly to tariffs and the effects on that, so keep that in mind. And what will that mean for gold? Everyone is panicking, but you can see gold is already going higher. It's made an all-time high here. Let's see what the data says, and then we can make our conclusion on gold. So our gold forecaster index using leading indicators is saying something. What is it saying? So you can actually see the red line had a dip here in 2008 and went back up. The same is happening now. Okay. When that happens, the green line, which is gold, starts to move higher. So from here on out, it went higher. So I expect the same thing to happen right now. So I still expect gold to go higher. The latest data point is a tiny dip, but it's still very elevated. So this should move up. Part of this rise could be attributed to the front running of the imports coming from the tariff announcements. So it could drop a bit later on. We will see. But currently it looks good. Taylor Rowland is still in the positive. That's good for gold. Misery index is inflation plus unemployment rate. I'm pretty sure that unemployment is going to go up with all of these tariffs. So I'm not sure about the inflation part yet. Normally tariffs should be inflationary because prices go up. But on the other hand, tariffs also have an effect on demand. And then if you consume less, then prices go down. So I'm not sure yet about that, but the unemployment rate is certainly going to go up. There's no doubt about that, at least for the next year. So that's already good for gold. Real output. Yeah, real output, forget about that. With tariffs, productivity is not going to improve, okay? Because you are not importing things, efficiency is going down, and yeah, you are going to see more inflation coming from that. So that's also good for gold. GLD, yeah, you can see the trend is higher. So central banks are buying gold. GLD has also started to rise again. LBMA, we still need to see the rise. But yeah, COMEX is also rising. So it's looking like gold is moving higher from this chart. And here you can see the GLD is starting to move up. We still need to get back to this point. When it does this, then gold is going to go to 4,000. Okay. COMEX, same. This keeps on rising. So that means that gold will go up. Deliveries, look at this. The deliveries keep on coming. That's bullish gold. Only the LBMA is not rising yet, but we will see. We don't have data yet. Then we have China demand and India demand. It has come down. That's correct, because gold is up, so you cannot buy the same amount, but it's looking stable to me. For silver, starting to bottom out here. I do think that silver will drop back due to the tariffs and recessions that come. That's not good for silver. Recessions are not good for silver. So maybe this could hit 30 again. SLV, PSLV, this is flat PSLV, SLV ounces basically also flat. Shanghai Future Exchange, yeah, demand coming off a bit. COMEX silver is up, that's good. Yeah, you can see all of these charts. We are still bottoming out in gold as a percentage of reserves, global assets. These things will keep on rising. Yeah, I think we should go at least to 20%, 25%. This is a new chart compared to the currencies. The dollar is losing its dominance and gold is replacing it. Okay, so there's plenty of upside still left. I don't think that gold has ended its bull market yet already. So nobody is in gold miners still, so plenty of upside coming. Let's see. Okay, China Central Bank is buying gold. I don't have new numbers yet. Those will come later on. China reserve composition, you can see gold went from 3% in a few years to 4.8% of allocation. This can still rise. They can still sell the treasuries and foreign exchange reserves and add to the gold stack. US Mint sales are very low, so there's not a lot of demand from retail still. But who cares about retail? It's the central banks and the ETF flows that are more important. Here you can also see there's no demand from retail for silver. Silver premiums at lows. Same for junk silver at lows, low premiums. So nobody is buying from retail. This is an important chart. This is the latest data point from today, saying that the Chinese gold premium is at 0.7%. This is above zero, so that means that this is probably going higher. The gold price will go higher. Every time when you see an elevated premium, then gold is bottoming out. Same here, bottoming out. Here, bottoming out. And this is the opposite. When gold premiums are negative, then you have a top in gold. So this is nowhere near a top. Everyone thinks this is parabolic, so it will come back down. That's not what the data says. Okay, the data says that this is going to go up. If this premium were to go like this, going down like this, down, then this could be a top. But the premiums are not going down like here. It's going up, which means there's fuel to go even higher. Silver premiums have come down, so this is less bullish for silver. But I mean, it can also still go to here and then it could shoot up. But the neutral line for silver should be somewhere at 12% because of the VAT tax, and it's below zero. So that's why silver is not doing that well. I'm more for gold than silver. Upmex gold premiums at 4%, which is average. COT report saying that the open interest is starting to rise a bit, but it's not at the top yet. So this is the top. This is still starting to rise. I think gold can easily go higher to 4,000. Smart money was going bullish again last week. This still needs to bottom out and go higher. Real yields, yeah, still need to go up from here. So yeah, when this turns, then gold will go much higher, and it will turn because I see a lot of rate cuts coming. This is real yields. Okay, when the rate cuts come, then this will go up because this is the consumer price index minus the, yeah, it's somewhere here, I can't see it, but basically these are real yields on a 10-year note. So if this goes up, then gold will go up again. This is seasonality. Don't forget we are 3 April, that's exactly at this bottom. So from here on out, gold should go up if you believe in seasonality. Okay, it's going to go up. Silver seasonality, yeah, a bit less, could go down here. So May and June are not that great for silver. Bullish percent index, yeah, we were very bullish on minus, so it can come off a bit. Currency in circulation still below this level, so gold has plenty room to move higher. 30-year to 10-year bonds, this is a good trend. This trend is starting to rise, so that's going to correlate with higher gold prices. Second derivative is above 0, so that means gold will go up. This is the change from a year ago, and I think, yeah, gold is going to go higher from this. Debt to GDP is going to rise. We know the curves, a lot of deficits. That will probably keep on rising, and that will push gold higher. With all of this defense spending that's coming up. Updated charts, the near-term forward spread is back negative. Each time when we are negative, gold will go up. Okay, so if this reverts back to here, gold will go to 4,000, 5,000. So this is very bullish for gold that we are back to negative. It means that we are going to see rate cuts. Okay, so rate cuts are coming. Gold will go up, stocks will go down. That's exactly what we see today. Tariffs are going to increase that possibility. It's going to magnify the move down for stocks and up for gold. Okay. The proxy for Fed's funds rate is moving down, so more rate cuts are coming. I do think that we will see more rate cuts now. Yeah, this trend looks like that the 2-year yield is starting to move like this. So we will see a lot of rate cuts, especially with these tariffs and stocks cratering. Yeah, this is actually the open interest for gold. It has moved down, which means there's more fuel for gold to go higher. Foreign gold deposits have always gone down, but now it's starting to rise, which means there is demand for gold from foreign central banks. Cash levels are, it looks like it's dropping very fast for the large banks. Liquidity drying up, probably very bullish for gold and not good for stocks. What else? Yeah, the LIBOR rate, borrowing fees have come down again, so nothing to see here. Gold futures curve still moving up. So I expect at least 3,500 to 4,000 in the coming years. Based on the futures curve, silver is basically the same. Gold and silver should move together. The VIX is up a lot today because of stocks cratering. And typically that's bullish for gold compared to stocks. So if you need to choose between stocks or gold, choose gold. Okay. Fundamental value is pretty neutral at this moment. So I think gold is fine at 3,000 level. DXY has come down. So this should actually be positive for gold. If DXY keeps on dropping 10%, for example, you are going to see 50% gains in gold. So that would bring us to 4,500. Yeah, Danish gold price target is still 4,000 by the end of the year and then 5,000. So I'm pretty bullish on gold right now. Let's take a look first at the deficit. What can we learn here? Yeah, deficit increasing, budget deficit also pretty elevated. This is still a massive drop. We will see. Maybe this will come back here after the tariff date. But look at this, the services trade balance has actually also dropped a bit. So this is also not that good. This is starting to drop along with the goods deficit. Let's take a look at this. Okay, it could indeed improve a bit in the coming months, that deficit. This is all front running. Import prices down, export prices stable. Yeah, could be that the deficit is going to shrink a bit. For commodities, the prices are still elevated, so price levels are indeed rising. So I think prices up means inflation up. That's my base case. GDP, yeah, I think GDP is going to crash with these tariffs. That's good for gold and bad for stocks. The dollar is already dropping a lot following this deficit line. So deficits are ballooning, skyrocketing, and the dollar should follow, going down. Okay, what about capacity utilization? Capacity utilization is actually improving. Yes, so inflation is coming. If this goes up, that means inflation will go up. You can actually also just look at this page, CPI page, and see where inflation is going. PPI is rising, and here when you do this, then you can see what inflation is doing. Down, up, down. I think with oil crashing, this could go down even more. So that's bad for things like base metals, commodities, oil, bad for silver even. If this goes down, that's bad for silver. So watch this space. It's not really rising. so that's not good for silver. It's not bad. It's basically flat. When you look at 2008, it was a completely different picture. You could see here that it was cratering. Okay, see, it even touched the zero line. Okay, we are nowhere at the zero line yet, but it could happen very fast if oil keeps going to $50. That could be a problem. Okay, so I'm not bullish on oil at all because of these tariffs. You know that global trade will freeze and you will transport less, you will have less trucks driving. Someone said that today their imports of the equipment went up 34% because of the tariffs. So nobody is going to import things anymore, or they will need to pay a higher cost, increase their prices, and people will consume less of it. So that's the problem right now with these tariffs. You can even go to freight here. Let's see how the freight is doing. Freight index is going to crater, I think. That's not good for container shipping, freight shipping. Let's see what the latest data says. Yeah, it's negative. It's below zero. This is still above zero, but this one is clearly below zero. Real GDP is going to be dropping, I think. Yeah. So not good. Let's look at central banks. Does Besant still have money in the bank or not? I think he still has. There's going to be tax receipts coming in, so he will still have some money left, but not a lot, I think, with all of these stocks going down. Because we can see that central banks are stopping with the QT. Yeah, so less QT and probably going to QE again at some point. Treasury general account is the purple line. Let's see. Yeah, purple line is dropping. You can see it here, dropping. Probably some bounce from taxes, and then it will go to zero at some point later this year. And then, yeah, stocks will crater, and or they will need to print money to get this back up. Okay, let's look at some blog posts. Yeah, this is an important one. The Brave Butters Kelly leading index has gone negative or is about to go negative. When this happens, then stocks will go down. So this is the weekly economic index. If this goes negative, this is about to go down. You still have maybe 6 months to a year to prepare. When this goes negative, this thing probably goes down along with stocks. So not a good outlook for stocks, but very good for gold, of course. This we already looked at. We got reciprocal tariffs. Look at this rise, tariffs increasing to 22% on a longer time scale. Yeah, it's actually back to average, but I mean, this is 1900s, and now we're back to the 1800s. So this is a huge increase and will have massive effects on the global economy. And look at this. Tariffs are calculated by halving this amount, and this is actually the deficit divided by the imports to USA. So Some have even 90% because they import everything from Vietnam and don't export anything to Vietnam. So these tariffs have massive implications for companies like Nike, and that will increase their costs a lot. And you can already see that Nike went down 15% or so. So that's not good. Huh? This also important. Yadeni, he lowered his target for stocks. So this was from a month ago or so, a month or two ago. It was at 7,000, 6,500. Then he lowered it below 7,000, 6,000. So you can see he has lowered his upside to stocks. I think this should go even lower with the tariffs. We will see. So that's Yadeni being bearish on stocks. Tariff effects, you can see tariff is going into effect, and this is going to move through the economy in the following quarters. So it's not like it's having an effect right now. It's going to have an effect in the following quarters to a year from now, and it's not good. So tariff effect is going to have a negative effect on GDP growth, and even if they do some tax cuts or spending boosts, it will not offset this cratering in GDP from the tariffs. So expect a recession to come, and that's good for gold. Okay, gold likes recessions. Then we have here Goldman Sachs is raising gold prices to 4,000, 3,600. We are still at 3,100. So I believe Goldman Sachs, we are going much higher. US layoffs are spiking. This is bullish for gold. More unemployment, which means misery index goes up, so gold will go up. So a lot of layoffs will come. We have the Philly Fed Services Survey cratering. Bad for stocks, but good for gold. We also see the data from University of Michigan saying that they are expecting an unemployment spike in the coming months. So when the white curve goes up, then the unemployment rate will follow. Okay, this going up, which means we should expect this to go to 5%, maybe 6% unemployment rate. That's good for gold. FOMC meeting, yeah, they had a new dot plot. Rate cuts are coming. Rate cuts are bullish gold. So it looks like this video is leaning towards a lot of bullishness for gold. This is the expectation from the consumers. They think unemployment is going to go up in a year from now, inflation going up in a year from now. So that's both good for gold. Yeah, Danny lowered target, yes. Oil, yeah, you can throw everything away about this chart because tariffs are extremely bearish for oil. No more transports, so don't even look at this chart. And basically, yeah, you have 5 months left, and this was the Brave Butters Kelly index going negative. You have 5 months left to save yourself buying gold. Okay, so my conclusion is that gold will go higher, especially with these tariffs, and you can already see everyone panicking but buying it back. So this was a good dip buy, and we are going much higher in gold. Everything I said in this video was bullish. gold miners mine gold, okay? If gold goes up, these gold miners are going to make loads of money because they are mining gold. At lower oil prices, so 10% of their cost is in oil, and oil is at the 666 level and going lower, absolutely lower. So it's going to 60, maybe even 250. That's because the whole global trade is going into permafrost. And gold up, oil down. I'm going to start drawing my Tasmanian tiger with a huge mouth because gold is going to 4,000 and oil is going to 50. So I'm preparing for that. And that was the update for the month. I'll see you in the next video. Bye.